Have you ever felt like you had an industry all figured out, you know, only to find out it's actually way more complicated than you thought?
Oh, absolutely. I think that happens a lot, especially in a sector like mining, where on the surface it seems straightforward, but when you start digging deeper.
You find a whole world of complexity and opportunity, right?
Exactly.
That's exactly what happened to us when we started researching Sibanye Stillwater.
Sibanye Stillwater.
Yeah, SBSW, if you're looking at the ticker.
Ah, interesting.
They're not your typical mining company. I mean, they're a multinational group operating across 5 continents, involved in both mining and metals processing.
Wow, that's a pretty expansive reach.
Right. And the resources you send over really highlight just how fascinating their story is.
So, what's our goal with this deep dive? What are we hoping to uncover?
Well, Sibanye Stillwater is clearly a complex company, and we want to help the learner understand the essentials: their business model, their leadership, their financials, market sentiment, ownership, and the risks they face.
Sounds like a lot to cover.
It is, but we're going to do it systematically. We'll start with the foundations of their business, then move on to management evaluation, scrutinizing their financial health, checking the market's temperature, looking at key ownership, and finally, assessing those inherent risks.
Okay, I like the structured approach.
Hopefully, by the end, we'll have a surprising perspective on Sibanye Stillwater.
Well, let's get started then. Where should we begin?
I think it makes sense to start with what they actually do.
Their core business, right?
Exactly. So, Sibanye Stillwater primarily extracts and processes platinum group metals. That's platinum, palladium, rhodium, and of course, gold.
The classics.
But it's not just about those primary metals, is it? They have a surprisingly diverse range of revenue streams.
Oh, absolutely. You've got those core metals, but then you have byproducts like nickel, chrome, copper, and cobalt.
And don't forget about their PGM auto catalyst recycling and mine tailings retreatment.
Right, turning what was once considered waste into a valuable resource. That's smart.
It's like a circular approach to mining.
It speaks to a more sustainable model, too.
Which brings us to their strategic move into battery metals with the Keliber lithium project in Finland and the Gallicam project in France.
Ah, so they're looking beyond traditional precious metals.
It's like they're anticipating the future needs of the energy transition.
Makes sense.
So how does Sibanye Stillwater stack up against its competitors on a global scale?
Well, they're definitely a major player. They're one of the world's largest producers of platinum, palladium, and rhodium.
And a top-tier gold producer too, right?
Yeah, which means they have a pretty big global footprint. They've got operations in the Americas, Southern Africa, Europe, and Australia.
And a market capitalization of around 3.07 billion US dollars.
Not small potatoes. That kind of scale likely gives them some significant advantages, wouldn't you say?
Absolutely, especially in terms of cost efficiency. It's basic economies of scale.
Right.
Okay, let's shift gears a bit. Beyond the raw numbers, what does Sibanye Stillwater emphasize when it comes to their values and how they operate?
Their primary message is about sustainable resource management. It's clearly a big focus for them.
Which makes sense considering the growing emphasis on ESG investing.
Exactly. And they're producing materials crucial for the energy transition. They're really trying to show that they're committed to safety, environmental responsibility, and community engagement.
Their strategic differentiator, inclusive, diverse, and bionic, really captures that.
Bionic.
Yeah, it implies a pretty heavy focus on integrating technology into their operations.
That's interesting. We should definitely encourage the learner to look into how this bionic approach is actually being implemented. What specific technologies are they using, and what impact are they having on the business?
Excellent point. Now, speaking of the future, the outlook for both the PGM and gold markets seems pretty positive.
Oh, yeah, the projections are promising. The PGM market is expected to reach, let's see, somewhere between 33 and 35 billion US dollars by 2030 to 2033.
Wow. And growing at an annual rate of 4.0 to 4.6%.
Driven by the automotive industry, stricter emission standards, and the growth of clean energy tech. Gold's doing pretty well, too. It's projected to hit between 281.7 and 354.99 billion US dollars by 2032 to 2037.
That's a huge market and a pretty healthy growth rate too, right?
Yeah, around 2.7 to 3.8%.
So what's driving that?
I think it's a combination of things. There's always that safe haven appeal with gold. It's seen as a store of value during times of uncertainty. And of course, there's the constant demand from the jewelry and electronics industries.
Okay, so the demand for their core products looks pretty good. But Sibanye Stillwater isn't operating in a vacuum, are they? Who are their main competitors in these markets?
Oh, they've got some stiff competition.
Like who?
Well, in the PGM space, you've got companies like African Rainbow Minerals, Anglo-American Platinum, Impala
And
Platinum,
on a global scale.
Glencore, Norilsk Nickel. Those are big players. And in the gold market, they're going up against companies like Newmont, Agnico Eagle Mines, Barrick Gold, and AngloGold Ashanti.
That's quite a lineup.
It's a competitive landscape.
Understanding these competitors is crucial for the learner when evaluating Sibanye Stillwater's strengths and weaknesses.
Right. Absolutely. You need that context.
And operating across different continents, especially in places like South Africa and the US, they must be dealing with some pretty complex regulations.
Oh, definitely. South Africa has extensive regulations around mining. They require government-issued mineral rights, environmental impact assessments, social impact assessments. There's a whole slew of legislation, like the Mineral and Petroleum Resources Development Act and the Mine Health and Safety Act.
So it's not just about getting the gold out of the ground.
Not at all. They also have to comply with all sorts of environmental regulations and broad-based Black economic empowerment requirements, which are regulations aimed at promoting economic inclusion of previously disadvantaged groups in South Africa.
That's a lot to keep track of.
And in the U.S., the regulatory environment is just as complex, if not more so.
How so?
You've got multiple federal laws and agencies involved, like the EPA and MSHA, and often individual states have their own regulations, too.
So it's layers upon layers of regulations.
Exactly. And navigating all that can be a real challenge, even for an established player like Sibanye Stillwater.
It sounds like breaking into the mining industry is no walk in the park.
It definitely isn't. The barriers to entry are really high.
Why is that?
Well, first of all, the initial investment is huge. You've got to explore, develop the mine, purchase equipment, all of which requires massive capital.
And then there's the time factor.
Right. It can take years to go from discovering a deposit to actually producing anything.
And we can't forget about the limited availability of economically viable mineral reserves.
Definitely. And then there are the technical challenges. Deep-level mining, which is common in South Africa, is incredibly complex.
So these barriers to entry, they create a competitive advantage for existing companies like Sibanye Stillwater.
For sure. It's not easy for newcomers to come in and compete.
All right, we've got a good grasp on the industry and the competitive landscape. Let's talk about the people at the helm. What about Sibanye Stillwater's management team?
Well, for over a decade, Neil Froneman has been the CEO.
Since 2013, right?
Yeah. And during his tenure, he's really transformed the company. I mean, he's spearheaded a pretty aggressive growth strategy, a lot of mergers and acquisitions.
So he's turned a South African gold mining company into a global diversified metals producer.
Exactly. They acquired Stillwater Mining, Lonmin, Aquarius Platinum.
And they've even ventured into battery metals under his leadership.
Right. Froneman has definitely left his mark on Sibanye Stillwater.
For the learner, I think it's important to understand this focus on growth and diversification under Froneman's leadership. It really sets the stage for where they are today.
Definitely.
But there's a change coming at the top, right?
Yeah. Richard Stewart, who's currently their chief regional officer for Southern Africa, is taking over as CEO in September 2025.
So a bit of a changing of the guard.
It is. But Stewart has been with the company since 2014, so he's deeply familiar with their operations, especially their PGM business.
It sounds like they're aiming for continuity.
Yeah, which makes sense.
Now, how has the market reacted to Froneman's leadership? I seem to remember the share price being pretty volatile.
It has been. There was a big upswing between 2020 and 2021.
Right.
But then it dropped. And a lot of that can be attributed to the volatility of PGM prices, which, as we know, has a direct impact on Sibanye Stillwater's financials.
It just highlights how sensitive mining companies are to commodity price fluctuations.
It's a key risk for investors to consider.
For sure. Now, managing a mining operation of this scale across multiple continents, it can't be easy. Have there been any significant operational challenges under Froneman?
Unfortunately, yes. They've had some serious safety incidents at their mines, tragically resulting in fatalities.
That's terrible.
It is. And in response, they've implemented stricter safety protocols across all their operations.
Have they taken any other steps to address these concerns?
Yeah, they've been proactive in aligning their tailings storage facilities with the global industry standard on tailings management.
So they're trying to prevent future disasters. And beyond safety, what about their relationship with the communities where they operate?
Well, in 2021, after acquiring Lonmin, they launched the Marikana Renewal Program.
What's that about?
It's a long-term initiative aimed at addressing the social and economic consequences of the 2012 Marikana massacre. They're investing in education, housing, and employment opportunities for the affected communities.
It's a way of trying to make amends, I suppose.
I think so.
And for investors, transparency is key. How does Sibanye Stillwater handle their investor relations?
They're pretty transparent. Their website is packed with information.
Like what?
You can find annual reports, quarterly reports, investor presentations, earnings call recordings, and transcripts.
Wow, that's a lot.
Yeah, they've got historical financial data, information on their dividend policy, contact details for their investor relations team. It's all there.
That's great. Easy access to information is crucial for investors doing their due diligence.
Agreed.
Okay, so transparency seems to be a strong point. What about their commitment to ethical behavior and good corporate governance?
They emphasize it a lot. Their iCares values highlight their commitment to ethical conduct.
And they have a code of ethics too, right?
Right. Plus, they're included in ESG indices like the Bloomberg Gender Equality Index and the FTSE4Good series.
So they're getting recognition for their ESG efforts.
They are, but it's not all perfect. The World Benchmarking Alliance pointed out some areas for improvement.
Such as?
They suggest Sibanye Stillwater needs to set more company-wide sustainability targets and link executive pay to social performance metrics more explicitly.
So they've got some work to do.
Yeah, but they're on the right track.
Now, let's talk about capital allocation. When a company generates profits, how do they decide to spend that money? What's Sibanye Stillwater's approach?
They seem to prioritize maintaining and enhancing their core mining operations.
So investing in projects that sustain or extend the life of their existing mines.
Exactly, like the Burnstone and K4 projects.
And of course, they're investing in operational sustainability.
Which is crucial in today's world.
And let's not forget their investments in battery metals through the Keliber and Gallicam projects.
Right, that's a big part of their growth strategy.
So they're balancing the need to maintain their current operations with investing in future growth.
Smart move.
We talked about mergers and acquisitions earlier, how Frohnman really drove that strategy.
Yeah, it's been a key part of their transformation. They've used M&A to become a major PGM producer and expand into battery metals and recycling.
But it's not without its challenges.
Right. Integrating these new operations can be complex, and the recent discontinuation of the Rhyolite Ridge project suggests they might be taking a more cautious approach now.
It's a good reminder for the learner that M&A activity needs to be carefully evaluated. It's not always a guaranteed path to success.
Absolutely.
Okay, let's talk about returning value to shareholders. Have they been doing share buybacks or paying dividends?
Both, actually. They've done some pretty substantial share buybacks. In 2021 and 2022 alone, they repurchased a lot of their outstanding shares.
And they have a dividend policy too, right?
They do. They aim to distribute between 25% and 35% of their normalized earnings.
But their dividend payments haven't been entirely consistent.
That's true. They've had to cut dividends recently due to the volatility of commodity prices impacting their profitability.
It's a reminder that dividends are not guaranteed.
Especially in the mining sector.
Okay, final question on this topic. What about their return on invested capital, their ROIC?
Well, the data is a bit mixed and, frankly, a bit concerning. Some long-term figures look okay, but more recent numbers, including some negative ROIC figures, suggest they've been inconsistent in generating returns.
So are they efficiently using the capital invested in their business?
It's not entirely clear. And if their ROIC continues to fall below their cost of capital, that could mean trouble for shareholders in the long run.
Definitely something for the learner to investigate further.
Agreed.
Okay, we've done a deep dive into their business, management, and capital allocation. Let's shift our focus to their financial health. What's the overall picture?
Well, as of March 2025, their market capitalization is around 3.04 to 3.09 billion US dollars. Their price to earnings, the PE ratio, paints a somewhat confusing picture. Their normalized PE ratio is between 30 and 31, which is high.
But their trailing 12-month PE ratio is negative, indicating recent losses.
Yeah, but the forward PE ratio is positive, suggesting that the market expects their earnings to improve.
Interesting. And what about their 5-year average PE ratio?
That's over 52, which is even higher. So if earnings do recover as expected, some might argue that the stock is currently undervalued.
So the market seems optimistic about the future, despite their recent struggles.
That's one way to interpret it.
What about their revenue trends? Are they growing?
Actually, recent revenue growth has been negative. We're seeing declines in the trailing 12 months, as well as for the full years of 2023 and 2022.
That doesn't sound good.
No, it doesn't. But their average revenue growth over the past 5 years has been positive.
So maybe it's just a temporary dip?
We'll have to see. Analysts are projecting more moderate growth in the coming years.
Okay, so revenue is a mixed bag. What about their profit margins? They must be under pressure with the commodity price volatility.
Oh, they definitely are.
Yeah.
Their gross and net profit margins are way lower than their 5-year averages. Some sources are even reporting negative operating and net profit margins.
Not a good sign.
Not at all. It suggests they're having trouble controlling costs and maintaining profitability.
What about their debt? How are they managing that in this environment?
Their debt-to-equity ratio is around 0.87 to 0.96, so it's moderate.
That's not too bad,
It isn't excessive, but it has been increasing recently, which is something to watch.
especially when you consider their declining profitability.
Exactly.
What about their cash flow? How's that looking?
Not great. Their free cash flow has been negative in recent periods.
Compared to a positive figure in 2022.
Right. It means they're having trouble generating cash after covering their capital expenditures.
Which is a problem if they want to invest in future growth or continue returning value to shareholders.
Exactly.
Their price-to-book ratio is around 1.3 to 1.35.
Not too high, not too low.
Okay, so financially, they're facing some headwinds. Profitability and cash flow are under pressure, but their debt levels are manageable. And the market seems to be betting on a turnaround. Are there any other financial metrics that we should consider?
Well, their earnings are volatile, which is pretty typical for mining companies. Dividends have been inconsistent, and their interest coverage ratio has actually turned negative.
Meaning?
It means their earnings aren't enough to cover their interest expenses.
Yeah, it's a red flag.
It is. But on a positive note, their liquidity ratios, like their current and quick ratios, suggest they have enough cash on hand to meet their short-term obligations.
Okay, so it's a mixed bag.
Very much so. Their financial health is closely tied to the ups and downs of the commodity markets.
Okay, let's move on to market sentiment. How is Sibanye Stillwater perceived by the market?
I'd say there's a lot of caution and uncertainty surrounding them right now.
Why is that?
Well, analysts are divided in their opinions. Some have lowered their price targets because of the recent financial performance and general market uncertainty.
But others are more optimistic, seeing potential value at the current price.
Exactly. And the stock itself has been pretty volatile. It's bouncing around quite a bit.
In a complex investment case.
Definitely.
What are some of the specific price targets that analysts are setting?
The average one-year price targets range from about $4.17 to $4.84, but the individual targets are all over the place.
How so?
The lowest is around $3.17, and the highest goes up to $5.90. That's a pretty big spread.
So a lot of disagreement about where the stock is headed.
It seems so.
Have there been any recent news or developments that might be influencing these opinions?
There have been a few things. Neil Froneman's retirement announcement, for one, and the transition to Richard Stewart as the new CEO. That's a big change.
Yeah, the market's probably trying to figure out what that means for the future.
And then there's the European Commission's designation of their Calibre and Gallicam projects as strategic projects. That's positive news for their battery metals strategy.
It is.
Oh, and they recently signed a $500 million metals streaming agreement with Franco-Nevada.
That's a significant deal.
It is. It gives them cash now, but it also impacts their future revenue from those metal streams.
Trade-offs.
Always.
What about other sentiment indicators like short interest and the put-call ratio?
Well, short interest is moderate, and the put-call ratio is slightly bullish.
So some optimism there.
A little bit, but
Yeah.
these indicators can change quickly. They're just a snapshot in time.
Okay, so market sentiment is a bit of a mixed bag right now.
You could say that.
Let's move on to ownership.
Mm-hmm.
Who are the major stakeholders in Sibanye Stillwater?
Institutional ownership is surprisingly low, somewhere between 7.79% and 15.05%.
Who are some of the key institutional investors?
You've got Legato Investment Management, BlackRock, Vanguard. Those are some of the bigger names.
And what about insider ownership?
That's really low, only about 0.20%.
And no significant insider buying or selling recently.
Not that we've seen.
Okay, so institutional and insider ownership are both pretty low. Are there any other concentrations of ownership worth noting?
Yeah, the top 25 shareholders control a pretty significant chunk of the outstanding shares.
Who are some of those?
The Public Investment Corporation in South Africa is a big one, and then there's XORNV.
So even though overall institutional ownership is low, there's still some concentration among a smaller group of investors.
That's right.
How does their ownership structure relate to their corporate governance practices?
Well, they're very vocal about their commitment to good corporate governance. They follow the King the Fee Code, which is a key framework in South Africa,
And they have a majority of independent directors on their board.
which is generally seen as a good thing.
Okay, we've covered a lot of ground. Let's do a SWOT analysis to summarize the key takeaways,
Sounds good.
starting with their strengths. What are Sibanye Stillwater's main advantages?
Well, they're a large-scale diversified producer. They've got a global presence in PGMs and gold, and they're expanding into battery metals and recycling.
And they've got an experienced management team, even with the upcoming CEO transition.
Right. And they're committed to sustainability, good corporate governance, and transparency with investors. Plus, they're pretty efficient in managing their working capital.
Okay, that's a solid set of strengths. What about their weaknesses? Where do they need to improve?
Well, their earnings and dividends are pretty volatile, which can be a turnoff for some investors, and their recent profit margins and free cash flow have been negative.
Not good.
No, not ideal. They also have a moderate level of debt with negative interest coverage, which is a concern, and institutional ownership is relatively low, which might signal a lack of confidence from the big players.
And let's not forget the areas where their ESG disclosures could be strengthened.
Right, there's always room for improvement.
Okay, looking ahead, what are some of the key opportunities for Sibanye Stillwater?
The demand for PGMs is expected to increase, driven by the automotive industry and clean energy technologies.
And gold should continue to benefit from its safe haven status.
Absolutely. Plus, the battery metals market is growing rapidly, and their recycling and tailings retreatment operations could help them lower production costs.
And there's always the potential to improve operational efficiency.
Always.
Now, let's not forget the threats. What are some of the challenges Sibanye Stillwater might face in the future?
Commodity prices are inherently volatile. That's always a risk. And the regulatory environments in both South Africa and the U.S. are complex and constantly evolving.
They've also had some serious safety incidents at their mines, which highlights the operational risks they face.
Right, and let's not forget the competitive landscape. They're up against some major players.
And they're exposed to potential supply chain disruptions, the socioeconomic and power challenges in South Africa, and growing pressure to adopt more sustainable practices.
It's a long list of challenges.
So, Sibanye Stillwater is a complex company with both strengths and weaknesses, opportunities and threats. What's the key takeaway for the learner?
It's not a straightforward investment decision. They have a strong strategic vision, they're diversifying into growing sectors, and they're committed to sustainability. But they're also facing some serious headwinds right now.
And their recent financial performance is a definite cause for concern.
It is.
So how should a value investor approach this, someone with a Warren Buffett mindset? What's the key question they need to ask?
The key question is whether the current market price adequately compensates for the risks.
The risks of commodity price volatility, operational challenges, and the successful execution of their long-term strategy.
Exactly. They need to assess whether there's a sufficient margin of safety.
So does the current price offer enough upside to justify the potential downside?
That's the million-dollar question.
And based on the data we've looked at, the recent financial data, is there that margin of safety?
I'd say caution is warranted. More in-depth analysis is needed before making a call on that.
Okay, and now for our end hook, something for the learner to ponder as they do their own research.
Okay, hit me.
Sibanye Stillwater is betting big on battery metals, particularly lithium. But what if there's a major technological breakthrough in battery technology?
Like what?
Like solid-state batteries that make lithium-ion batteries obsolete.
Ah, that would be a game changer.
Exactly. How would that impact Sibanye Stillwater's long-term prospects?
That's a great question for the learner to think about.
So to sum up this deep dive, Sibanye Stillwater is a complex multinational company operating in a volatile industry. They're undergoing a leadership transition, facing financial pressures, and the market is unsure about their future.
But they're also strategically positioned for growth in key sectors and committed to sustainability.
It's a fascinating story and definitely one worth following.
For sure.
If you want to explore more companies like this, be sure to subscribe to the Stock Analytics AI YouTube channel.
You'll find links to all the sources we used for this episode in the description below.
And as always, any specific stock suggestions will be in the comment section.
And please remember, this is just our analysis, not financial advice.
Always do your own research before investing.
This deep dive was created with the help of AI, which allows us to process and analyze vast amounts of data quickly.
But ultimately, investment decisions should be based on human judgment.